Welcome to the FinGlimpse podcast, where we analyze the world of business, finance, and the economy. We cover the latest market news, economic trends, and some interesting businesses. As a standard disclaimer, this podcast is for informational purposes only and should not be considered investment advice. Always do your own research. Now, let's get started.
Ever wondered what makes your AI chatbot think so fast? Or, why your phone stores so many photos without breaking a sweat? Today, we're pulling back the curtain on Micron Technology, one of the giants of memory and storage, to reveal the hidden forces shaping our digital world.
Yeah, and for this deep dive, we've pulled insights from Micron's 2024 Form 10-K, that's their big annual report, and their recent Q2 2025 earnings deck. What's truly fascinating here is how these documents, well, they don't just give us numbers. They paint a complete picture of a company's strategic direction, its challenges, and its monumental bets on the future. Our mission really is to extract the most important nuggets of knowledge, helping you understand not just what Micron does, but where it's going, and the immense complexities behind, the seemingly simple act of saving a photo or running an AI model.
Exactly. We'll explore everything from the specific types of memory that power different devices to the global economic forces and even the legal battles that shape this whole industry. Get ready for some aha moments because you're about to become very well informed on a company that profoundly impacts your digital life in ways you might not even realize. So let's start with the absolute fundamentals. Who is Micron and what exactly do they make?
Okay, so at its core, Micron is a major provider of memory and storage solutions. Think of them as building the foundational components that allow basically every digital device, from a tiny IoT sensor to a massive AI data center, to process and store information. Their main product categories are memory types like DRAM and storage solutions like NAND.
Okay, let's dive into DRAM first then, since that seems to be the faster type of memory. What are the key variations we should understand, sort of, without getting totally lost in the weeds?
Right. Think of DRAM, dynamic random access memory, as fast temporary scratch pad for a computer's brain. It's volatile, needs power. For the everyday workhorse, you've got DDR, double data rate. This is your standard memory for high-performance computing, general AI tasks, data-intensive apps. The latest generation DDR5 brings, significant improvements in speed and power efficiency.
And for something even more specialized, like for AI, I keep hearing about HBM.
Yes, that's where HBM, high bandwidth memory, comes in. This is a real game changer for AI. Instead of memory chips laid out flat, HBM stacks them vertically. Imagine a high-rise building right next to the processor.
Ah, okay, stacked.
Exactly. This 3D architecture allows for ultra-high data throughput and incredible energy efficiency, making it absolutely crucial for the demanding world of AI and high-performance computing. Then you have GDDR, graphics DRAM, that's optimized for graphics cards, gaming consoles, GPU data centers, essential for AI, VR, high-end gaming. GDDR7 is the new thing on the horizon there. And finally, for devices where power is really critical, like your smartphone or wearables, there's LPDRAM, low-power DRAM. It's designed to sip power, but still perform well. And actually, it's making inroads into PCs, cars, even some data centers now, too.
Got it. So that's the fast temporary memory. What about where data lives longer, where your photos and documents are stored even when the power is off?
Right. That's the realm of NAND memory. Unlike DRAM, NAND is non-volatile and keeps the data without power. It's rewritable, offers high capacity at a lower cost per bit, generally speaking. This is the tech behind the solid-state drives, the SSDs, in your laptop, data centers, consumer gear. It's also in what's called managed NAND, embedded directly into smartphones and other portable devices. Micron's latest, G9 TLC NAND, is really focused on high transfer rates for things like AI training. Then there's NOR memory, another non-volatile type, but it's really about fast read speeds, mostly used for reliable code storage, like the essential instructions to boot up your car or industrial equipment.
A boot up code, okay.
Yeah, that kind of thing. And finally, to pack a lot into a tiny space, they create multi-chip packages, or MCPs. These basically integrate multiple memory types, usually LPDRAM, into one compact, power-efficient unit, perfect for IoT, automotive, mobile.
It's clear they have an incredibly diverse product portfolio. It touches almost every piece of tech we use. But Micron isn't just headquartered in Boise, Idaho, right? Their operations are truly global.
That's a crucial point, yes. Their global footprint is massive and strategically vital. Beyond Boise, they have key locations for R&D, wafer fabrication, that's where the chips are actually made, and assembly and test operations scattered across the globe. You'll find them in Taiwan, Singapore, Japan, Malaysia, China, India, quite a few places. This broad distribution isn't just about spreading out, it's about building supply chain resilience, tapping into diverse talent pools, being closer to customers. It minimizes risks and helps with logistics.
Okay, this brings us to a really fascinating turn in their story, their financial trajectory. Micron's total revenue for fiscal 2024, it increased a remarkable 62% compared to 2023, reaching $25.11 billion. And this led to a net income of $778 million in 2024, which is, wow, a stark contrast to the $5.83 billion net loss in 2023. That's a huge turnaround. What's driving this?
It's a powerful recovery, absolutely, and it's driven by a combination of factors. Looking at product sales, DRAM revenue surged by 60%. That was largely due to a mid-40% increase in the volume of bits shipped, plus a low-teen percentage increase in average selling prices, or ASPs.
So prices went up and they sold more.
Exactly. And NAND sales saw impressive growth too, up 72%. That was fueled by a low 30% increase in both bit shipments and ASPs. So this improved pricing, combined with manufacturing cost reductions, significantly boosted their gross margin. It soared to 22% in 2024 from, get this, -9% in 2023.
-9, wow.
And it's also worth noting, part of that margin improvement came from selling off inventory that had been written down, valued lower back in 2023. So they turned that around.
So the 2023 loss was largely about depressed prices and having too much inventory.
Precisely. The decline in 2023 was primarily due to significant drops in ASPs for both DRAM and NAND. Plus, they had substantial inventory write-downs, a staggering $1.83 billion impact, and costs from underutilizing their factories. So this recovery really highlights a big shift in the market.
Let's zoom in on their most recent snapshot then. For their second fiscal quarter of 2025, revenue was $8.05 billion. That's up 47% year over year, though it was down slightly, 4% from the previous quarter. DRAM accounted for 76% of that revenue, NAND 23%. What's standing out in these recent numbers, especially thinking about AI?
Well, a key takeaway here is the undeniable and increasing impact of AI demand. It's huge. Micron reports that data center DRAM revenue hit a new record in FQ2 2025. And specifically, their high-bandwidth memory HBM revenue alone exceeded $1 billion quarterly. That grew over 50% just from the prior quarter.
$1 billion just in HBM?
Just in HBM quarterly. And this rapid growth isn't just a number. It has this profound effect on the broader market. See, one HBM bit requires significantly more fab capacity to produce than a standard DRAM bit, like maybe 2.5 times more for HBM3E compared to DDR5. They call this the HBM trade ratio.
Okay, so making HBM eats up more factory space.
A lot more. And this isn't just a technical detail, it's fundamentally reshaping the DRAM market. It means Micron is strategically dedicating valuable fab capacity to these higher-margin AI-specific products, which, in turn, creates a ripple effect. It tightens supply and potentially drives up prices for all other types of DRAM. It signals a major strategic pivot for the whole memory industry towards these high-value AI components.
That makes perfect sense. So while AI drives this massive demand for DRAM, what's happening with NAND, their other big product?
Yeah. On the NAND side, while AI boosts DRAM, the NAND fabs are actually still underutilized. Wafer output is down by a mid-teens percentage from prior levels. But Micron is making a clever strategic move here. They plan to reuse a portion of this underutilized NAND capacity for future HBM production.
Ah, converting it over.
Exactly. It's an agile adaptation to shifting market demand, leveraging existing assets for these high-growth areas.
Okay, so given this financial turnaround and the clear push towards AI, where is Micron placing its biggest bets for the future, particularly in terms of, global expansion?
That's precisely what their massive capital investments show. They're investing heavily, in new manufacturing facilities to meet future demand. In Boise, Idaho, they broke ground back in September 2022. Construction for a leading-edge memory fab started in October 2023. They're projecting meaningful DRAM output from there by fiscal 2027. Even more ambitious, though, is Clay, New York. They have plans to build up to 4 fabs over the next 20-plus years. Site prep is expected to begin in calendar 2025, with production ramping up later in the decade.
And it's not just the U.S., right? They're clearly thinking globally for these big expansions.
Absolutely. Beyond the U.S., they also have plans to support production of DRAM using EUV lithography. That's extreme ultraviolet lithography, very advanced stuff in Hiroshima, Japan. They're constructing a new assembly and test facility in Gujarat, India. Plus, there's a new HBM advanced packaging facility going up in Singapore and a DRAM test facility in Taiwan. These are truly global strategic investments.
These massive projects, though, they aren't happening without significant government backing, especially with the U.S. TCHIPS Act. What's the scale of this support?
You're absolutely right. The government incentives are a huge part of this story. Crucial, really. Under the U.S. TCHIPS Act, Micron is poised to receive billions in direct funding and loans. It's a clear signal of national strategic importance. Specifically, up to $6.1 billion in direct funding for the Boise fab and the first two fabs in Clay, New York.
$6 million.
Yeah. And they're also eligible for up to $7.5 billion in federal loans and a 25% investment tax credit on qualified U.S. semiconductor manufacturing investments. New York State is also providing substantial support, offering up to $5.5 billion in funding for the Clay facility over 20-plus years through tax credits and job incentives. Internationally, India has committed $1.8 billion for the Gujarat fab, half from the central government, and Japan's providing up to $1.3 billion for that EUV green production in Hiroshima. It really underscores this global race for semiconductor manufacturing.
But building these state-of-the-art facilities, especially at this scale, it can't be without significant challenges. What are the biggest hurdles they face?
Oh, not at all. These are incredibly complex undertakings. Huge challenges. They face issues like dependence on specific, often scarce materials, highly specialized equipment, and finding enough skilled labor. That's a big one. There's always the potential for supply chain shortages, increased lead times, inflationary pressures driving up costs. And in regions like the U.S., where, frankly, large-scale fab building hasn't been common recently, there's particularly intense competition for the limited pool of construction talent with the right expertise.
Right, people who know how to build these specific things.
Exactly. So while the incentives are huge, these expansions are super capital intensive and inherently difficult to execute on schedule and within budget.
So it's a constant balancing act then, securing the basics for their operations while constantly pushing the boundaries of what's possible in memory. How do they manage that complex global operation and keep innovating?
It means a relentless focus on their supply chain and operational dependencies. Micron relies heavily on critical materials, chemicals, silicon wafers, specialized gases. In many cases, only a limited number of suppliers can meet their exacting standards. Some materials even come from single sources, which is obviously a risk.
Single source, yeah, that's risky.
Definitely. Presents risks like sudden shortages, lead time increases, price hikes. They also depend on a vast network of third-party services, outsourced foundries, assembly and test providers, logistics carriers. All these points in the supply chain are susceptible to disruption from, regional conflicts, trade restrictions, even environmental regulations. And fundamentally, their operations are incredibly dependent on a reliable, uninterrupted supply of electrical power and water. Massive amounts.
That's a lot of moving parts to manage. Wow. What about their innovation engine? How are they pushing the boundaries of what memory can do next?
Well, their R&D efforts are a key differentiator and a significant investment area for them. The focus is always on continuous improvement, better performance, lower cost structure for both DRAM and NAND. A big highlight right now is their progress on 1-gamma DRAM pilot production. That incorporates EUV lithography, as we mentioned, and it's on track for volume production in calendar 2025.
Okay, 1-gamma, EUV, you mentioned 1-beta before. For those of us who follow this space but aren't engineers, what does moving to this next-gen memory actually mean? Like for what devices can do, or for Micron's competitive edge? How big of a leap is it really?
That's a great question because these advancements are really crucial. Moving to the 1-gamma node with EUV is a significant leap. It promises chips that use 20% lower power, offer 15% better performance, and achieve over 30% improvement in bit density compared to their previous 1-beta DRAM.
30% denser, some more memory in the same space.
Exactly. For you, the user, this means more efficient, faster devices. Think longer battery life in your phone, quicker processing in data centers and AI applications. For Micron, it means producing more memory per wafer, which directly translates to lower costs and hopefully a stronger competitive position.
That's a concrete impact. What about new products we might see or are already seeing from these innovations?
Well, they've already begun volume production on their G9 NAND node, which helps with higher capacity storage. For AI, they're now shipping these 8-high 24 GB HBM3E units, and also production-capable HBM3E 12-high 36 GB units. These are specifically designed to meet the massive data demands of AI accelerators.
The really powerful AI chips need this HBM.
Absolutely. They've also qualified and started shipping 128 GB DDR5 server modules. These are built on a single monolithic 32 DB GDRAM die, an innovative way to pack more memory for AI applications. And they've announced the next-generation GDDR7 graphics memory, aiming to significantly boost performance in graphics and gaming. Looking ahead, they're developing entirely new memory structures, materials, packages, constantly investigating new opportunities that leverage their core semiconductor expertise.
Beyond the chips and the fabs, there's this huge human element, right? And a complex legal and regulatory environment. In an industry starved for highly specialized talent, how does Micron approach its workforce strategy?
Yeah, in an industry like this, human capital strategy isn't just, good HR. It's absolutely make or break. It's a business imperative. They have about 48,000 employees globally, mostly in Asia, the US, and Europe. Women make up 31% of their workforce. Their talent strategy really focuses on attracting, developing, and retaining a highly educated, experienced workforce in what is a fiercely competitive environment. They partner with K-12 schools, post-secondary education, to build that STEM talent pipeline. And crucially, their focus on diversity, equity, and inclusion. They have these 5 key commitments, like increasing hiring from non-traditional pathways and underrepresented groups that's directly tied to their ability to actually staff these multi-billion-dollar fabs and drive innovation.
So DEI isn't just a goal, it's a necessity for staffing.
You could argue that yes. Attracting and keeping the right engineers and technicians is as vital as the technology itself, especially as they try to scale up so dramatically in places like the US. They also mentioned achieving global pay equity in 2024 and having comprehensive well-being programs.
That's a fascinating connection. What about the legal and regulatory world? How does that impact a global player like Micron?
Well, the semiconductor industry is deeply intertwined with international trade laws, and geopolitical tensions add significant complexity.
Yeah.
It's unavoidable. Micron, like many global companies, is subject to U.S. export controls, sanctions, and similar rules elsewhere. These can increase manufacturing costs, reduce demand, or flat-out limit sales to certain markets. A really notable example is the May 2023 decision by the Cyberspace Administration of China, the CTC. They determined that critical information infrastructure operators in China shouldn't purchase Micron products.
Right, I remember that. That must have hurt sales there.
It directly impacted their revenue in mainland China and Hong Kong, yes. And there's also the ongoing risk of new export controls, potentially on AI-related products, because of these increasing geopolitical tensions. That could further restrict future sales.
This is also an industry where patents are fiercely protected. I imagine intellectual property litigation is just a constant battle.
It absolutely is.
Yeah.
It's pretty much typical for companies in this industry to constantly face claims of infringing on others' IP rights. A prominent ongoing example is the Netlist litigation. In May 2024, a U.S. District Court jury hit Micron with a verdict for infringing 2 patents damages of $425 million and $20 million.
Ouch.
Yeah, and this is crucial, the Patent Trial and Appeal Board, the PTPAR, later found the asserted claims of both of those patents unpatentable. So Micron expects to appeal the verdict. It just highlights the complex back-and-forth nature of these disputes. It's not over yet. They also have ongoing patent infringement complaints from others, like Blisang Inc. and YMTC, in both U.S. and Chinese courts over 3D NAND and DDR5 products. It's a constant legal minefield.
Given how sensitive their technology and IP are, how does Micron handle the critical threat of cyber attacks?
They maintain a pretty robust cybersecurity posture, as you expect. Their risk management is aligned with standard frameworks like NIST CSF. They do regular risk assessments, employ technical solutions, firewalls, intrusion prevention, and provide ongoing employee training. Governance over cybersecurity is taken seriously. The board of directors, specifically their security committee, provides oversight. They get regular briefings from the chief security officer and CIO. While they acknowledge they've had incidents in the past, like most large companies, they state that none have been determined to be financially material. Finally, let's turn to their financial health and how they're thinking about creating value for shareholders. What's their liquidity and capital situation looking like? On the liquidity front, as of late August 2024, Micron had a strong position with $9.15 billion in cash and marketable investments. Against that, they carried $13.4 billion in debt. They expect to use cash generated from operations, plus those significant government incentives we talked about, and other available financing to meet their ongoing and very substantial capital requirements for building all these new fabs.
And what about returning capital to shareholders? Are they buying back stock or paying dividends?
Yes, they do both. They have a share repurchase authorization from their board, allowing them to buy back up to $10 billion of common stock. There's no expiration date on that. They repurchased $300 million worth in fiscal 2024, leaving about $2.81 billion still authorized. It's important to remember, though, this is discretionary. It's not guaranteed, but it's an option they have. They also declare a quarterly cash dividend. It was 0.115 cents per share as of September 2024. But again, the declaration and payment of future dividends are always at the discretion of the board.
Given the cyclical nature of this industry, their stock can be quite volatile. What are some of the underlying complexities in their financial reporting that require maybe significant judgment from their side?
Yeah, there are definitely several critical accounting estimates that involve significant judgment and can heavily affect their reported financials. Inventories is a big one. They're valued at the lower of cost or net realizable value. Basically, what they think they can actually sell it for minus selling costs. This requires projecting future selling prices, sales volumes, costs. It's a critical judgment call. If they're too optimistic, they might have to write down inventory later, like that huge $1.83 billion charge they took in 2023.
Okay, that write-down was massive.
It was. Another area is goodwill. They do an annual impairment assessment. In 2023, they recognized a $101 million charge to impair goodwill for the storage business unit, meaning they judged its future value had declined. And finally, income taxes are incredibly complex because they operate in so many jurisdictions. And changing international tax laws, like the OECD's Pillar 2 model rules, could significantly increase their tax expense from 2025 or 2026 in certain countries. These areas require constant, careful estimation that really impacts the bottom line. So if we try and connect all this to the bigger picture, Micron Technology isn't just selling memory chips, right? They are navigating this incredibly complex global landscape, rapid technological change, intense competition, significant geopolitical challenges, and these absolutely massive capital investments. Their financial health directly impacts innovation, job creation, and really the very foundation of the digital infrastructure we increasingly rely on, especially now with the AI revolution taking off.
That's spot on. What truly stands out to me after digging into this is how a company like Micron, despite being at the absolute cutting edge of technology, is also deeply intertwined with government policies, global trade dynamics, human capital strategy. It's a powerful reminder that even in these highly specialized industries, success is such a multifaceted endeavor. It relies on far more than just engineering brilliance. So here's a provocative thought for you, our listeners, to mull over. Given the increasing silicon intensity driven by AI needing more and more advanced chips and the rising costs of cutting-edge manufacturing, how might the balance of power shift between memory producers like Micron and their biggest customers, who are often the giants of AI and cloud computing? And maybe more importantly, what does that mean for the future cost and accessibility of advanced AI capabilities for you?
That's a great question to consider. This deep dive has certainly given us a lot to think about regarding the unseen forces shaping the technology in our lives.
Indeed it has. Keep those questions coming and keep diving deep with us. Until next time.
That's all for this episode of the FinGlimpse podcast. If you found our discussion insightful, please consider subscribing and leaving a review. We'd love to hear your thoughts and suggestions for future topics. Until next time, stay informed and make smart decisions. Goodbye.